The way I'm going to break this down is I'm going to go over specific examples of funds that you can consider investing in, and I'm going to highlight this in 4 different pillars. I'm going to talk about different domestic dividend funds. I'm going to talk about how you can invest in high dividend funds, how you can invest in REITs, and how you can invest in international dividend paying funds. Now, the way that dividends work, just so we're all on the same page, is you're going to go out and invest into this thing in the stock market. You can invest in individual companies like, say, McDonald's, or you can invest in a fund. McDonald's is one of the companies that pays out a dividend. A dividend is the cash payment that a company gives you for doing nothing except owning the stock. Most stocks pay you a dividend every 3 months, meaning every 3 quarters, and the companies that are paying out dividends are generally companies that have big profits because they don't know what to do with this cash. They have already saved a good amount of money, they're already investing some of this money in growth, and then they have this extra cash that they just want to give away to their shareholders, and shareholders are people that own a piece of those stocks. Now, for the purposes of this video, I'm not going to be talking about investing in individual companies like McDonald's because that's the most risky and the most work intensive, because that's going to require you to understand the company, understand the financials, to keep up with the company, listen to the earnings calls, and I think for the average person, that's not something that you should be doing. Instead, a much simpler solution is to invest in funds. A fund is a group of companies. So now instead of investing in McDonald's, you're investing in a group of maybe 500 companies, which McDonald's is one of them. And if these funds are focused in on paying dividends, it's much less work for you because now you can just invest your money into this fund. Now that we've laid the groundwork, let me go over some specific examples. Now I gotta give you the disclaimer. I am just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube, and I don't recommend what I do to anybody else. The first pillar that I want to talk about are domestic dividend paying funds. And when I say domestic dividend paying funds, what I mean are broad United States funds, companies that are in the United States that are working to pay dividends. And there's 3 examples that I want to go over: NOBL, SPYD, and SCHD. And as a disclaimer, I personally own shares of SCHD. NOBL, Noble, is an ETF. It's a fund that invests in S&P 500 dividend aristocrats. And at the time of me recording this video, it's paying out a dividend of around 2% a year. So what is a dividend aristocrat? These are companies that have paid out and increased the dividend every year for at least the last 25 years. But even more specifically, this is investing in dividend paying companies in the S&P 500. So this takes a look at the 500 largest companies in the stock market. Then it filters out the companies that pay out dividends, and then it finds the dividend aristocrats, which have been paying out and increasing their dividend every year for at least the last 25 years, and they're also part of the S&P 500. That's what Noble does. Now you might be saying, well, Jaspreet, these are not high dividends. It's going to be impossible for me to create an income to fund my lifestyle. Hold your horses, I'll get to that in just a minute. The second is SPYD, which is currently paying out a dividend of 4%. SPYD is a fund that gives you exposure to dividend paying companies in the S&P 500. And then you have SCHD, which is paying out a yield of 3.3%, which is the most broad out of these. SCHD is a fund that invests in high dividend paying companies in the United States, which may not fall in the S&P 500, which includes companies that fall in the S&P 500 and companies that may not fall in the S&P 500. If you don't mind taking on some higher risk, well, then you can consider some higher dividend paying ETFs. I found these through a quick Google search and a NerdWallet article, but a couple examples are XSHD, which is paying out a 7.2% dividend yield. This is an ETF created by an institution called Invesco, and this is investing in small cap companies, smaller companies that also pay out high dividend yields. And the DIV, which is an ETF created by Global X, which invests in super high dividends in the United States, which is currently paying out a 6% dividend yield. If you want to get a little bit more sophisticated, maybe you say you want to get more exposure to the real estate industry and you want to get cash from that. This is where you can consider investing in REITs. A REIT is a real estate investment trust, and these are companies that are involved in the real estate space. Now, the interesting thing about REITs is that they have to follow a special rule called the 90% rule, which says that REITs must take at least 90% of their taxable income, essentially their profits, and distribute this money to their shareholders through a dividend, which means that REITs have to pay out most of their profits in the form of dividends because that's why people invest in them. It's for that cash flow. And so they want to distribute this cash flow, the rental income, to the shareholders. And here are a couple examples of ways that you can get exposure to REITs. Again, I'm not telling you what to invest in, just getting you started on your research. One is REZ. This is a REIT that gives you exposure to residential real estate. That means this is investing in companies that are investing in single family homes and apartment complexes. At the time of recording this video, is paying out a 2.4% yield. And then we have XLRE, which invests in the ancillary real estate businesses. That means this is investing in the property management companies, the property builders, the developers. At the time of recording this video, this is paying out a yield of 3.3%. And then if you want to get even more sophisticated, you can consider investing in international ETFs. These are funds that are investing in dividend-paying companies outside of the United States. So there's higher risk, but also higher potential growth potential, because now not only is the company working to grow, but the country is also working to grow faster because it's a smaller country. A couple examples of this are RWX, which is currently paying out a 3.5% yield, and VYMI, which is something that I'm personally invested in as a disclaimer, currently paying a 4.3% yield. And the goal with both of these types of REITs is to invest in high dividend paying companies outside of the United States. Now that I've given you a few examples, let me show you how you can actually build your generational wealth. How do you build your strategy? Even if you don't make a ton of money, that way you can actually succeed with this strategy. And if you are an investor and you want to stay up to date on what's happening in the financial markets so you can be a smarter investor, Market Briefs is a free resource that I created. It is a free newsletter where every day my team is working to break down what's happening in things like the stock market, the housing market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read newsletter. It is completely free. You can read it in less than 5 minutes every morning. So if you want to join, all you have to do is click the link down in the description below. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.